Well, we don't think it's coming back for a while, right? Probably not for the next 2 to 3 years, right? And as you mentioned, there are two weighing factors there. One is the surprising spike that we saw in unemployment for the youth. And the other one is the real estate market, right? So the average household in China owns 1.5 homes, right? So you can think about how this is going to be a long-term problem that's to come, right? When a couple gets married, you know, with a one-child policy, right, who's going to need 3 homes, right? So this problem is here to stay, right? So the point is, and the other thing that the 1.5 per household tells you, right, is homes here are being looked at as not only the place where you live, but your nest egg, right? This is the replacement for the social safety net that is still not where it needs to be in China. And it's really concerning for them to see their nest egg lose value. And that will continue to weigh on sentiment along with the unemployment picture. So we see this picture of low consumer confidence here to stay for a while. You say 2 to 3 years at least. Yes, yes.
Yeah, that's astonishing. I do want to turn the attention to the stock market, because without that confidence and that demand, it looks like the PBOC is focusing on the capital markets to try to reinvigorate some form of confidence that hopefully they believe will, I guess, translate into that real demand. You've got also some data, and you've crunched some numbers on, you know, some timeline focusing on the 10-year government bond prices as well. Tell us what the bond market is telling us.
Well, we always like to look at the 10-year of China, right? I think it's very, very telling in terms of the mood. Right? This is a very important asset for both banks and insurance companies, right? And is being followed very closely by them, and it's a key driver in terms of how much they're looking to inject capital into the market, right? And as you can see, it's been on a downward trend. There's no question about it that it has its ups and downs, and the announcements of the stimulus, as you mentioned, has basically brought the rates back up again. But our guess is that this is temporary, and you're going to see the continued downward trend. More importantly, I really believe that China is looking at a deflationary coming years, the way things look right now, especially from the consumer side.